Guys, welcome back to My Tribe Trading. This is Stock Caller, and this is part 3 of the Scoreboard Strategy training. A couple things you need to open today, as usual, as in part 1 and part 2. Go ahead and go to the Discord, My Tribe Trading, and on the left-hand side, if you're on your desktop, go to Scoreboard channel. I'm going to share my screen. This out of the way. Okay, open the scoreboard. And open the strategy document. Okay, we've already done parts 1 and part 2, which can be found on our YouTube channel. Scoreboard Strategy Part 1 is getting set up. Scoreboard Strategy Part 2, conception. And today, we are going to be studying momentum through volume. It's the first pillar. There's 4 pillars total. And when you think of a pillar, think of not a deer antler, but think of, let's pretend this deer antler is a table and it's got 4 pillars. Okay. If you take away one pillar, it still stands, but it's not as supported. Take away 2. So you get the idea. We're just going to focus on the first pillar today. Momentum through volume. And these are the words of DI. The strategy involves trading the top game, which is receiving the most volume and creating the most explosive price action. The combination of volume and price action will result in momentum. This is what we're after. Volume and price action are the 2 key components to every successful trade. Volume drives price action, which results in momentum. Hence, we are utilizing a momentum strategy. In the day trading world, volume is king. How many times have you heard that? Volume accounts for stocks going up and stocks going down. Without volume, a stock would be static. There would be no price action, no gain or loss. Everything we do is based on volume, and everything the stock does is driven by volume. Something that comes to my mind right here is a lot of times traders on comment sections on brokerage sites or like StockTwits, they'll say like, oh, look at all that volume on the day, like, oh my gosh, there's 1.3 billion volume. But they don't realize that even though that's a lot of volume, there's buyers and, buying and selling volume within there. So just to say like, oh, that's a lot of volume, I should buy, doesn't give you the whole picture. All right. So volume creates price action creates momentum. But what exactly is volume? Embedded in any given stock are the traders that hold positions within that stock. All of these positions constitute volume. Here's a brief explanation of the different types of volume embedded in a play. Long positions, short positions, retail buying, retail selling, retail shorting, institutional buying, institutional shorting, long swing positions, short swing positions, and on and on. All of these types of volume affect momentum, either positively or negatively. We want to be in a position where the stock moves unencumbered by negative volume as we trade a stock, because we, with this strategy, go long. That requires that we trade a specific type of setups that yield the most explosive types of plays. In other words, the number 1 runner or top gainer that is receiving the most volume and price action resulting in explosive momentum. So what's a top gainer? We've covered this before in previous parts, but I want to show you again. On my Webull, if you have Webull, there's a toolbox up here on the right, add widgets. You can find this one, top gainers, on that widget bar. Okay. But the top gainers of the day, this is from Friday day. And these are like the top 10. I mean, you can look at a lot more, but the way it closed out the day, it looks like there was one that closed at 100%, KAMN. And I believe that was a buyout. But anyways, so that's what DI is talking about here with the top gainers. So let's move on to the next pillar. All right. Number 2, Risk mitigation. Everything that I have done regarding both the strategy and the scoreboard is based on risk mitigation. If you stick with the scoreboard averages as your foundation, then you are providing yourself the optimal chance for success with minimized risk. This results in typically 1 or 2 plays per day, but these are the most explosive and highest volume plays the market has to offer. Again, that's what I want to trade. That's what I want to trade because I can make the most bang for the buck, so to speak. To mitigate risk, you have to understand where the risk resides. That's harder to capture than you might think. The scoreboard is instrumental in showing us what these explosive plays have in common, and as a result, we have boundaries known as averages that if we adhere to will help us stay away from the higher risk plays that don't fit the strategy. It is a far better thing to do in trading 1 or 2 optimal setups a day than to trade a dozen mediocre setups. Day trading is about capturing the most profitable plays on any given day, and to do this, we need to know what these plays are and avoid all the others. By avoiding the suboptimal plays, you are minimizing potential loss. Let's open up TradingView. Okay, and what DI is talking about here, sorry, not TradingView. Go to the scoreboard, open it up. Across the top here, in the second row are the averages across the top. Like launch price, average 285, penny float 295, and on and on. We're going to get more into that later, but when he's talking about averages, that's what he's referring to. So to minimize your risk, he's gone and crunched the data over a year's time to find out which stocks produce the best gains, and then averaged the data so that we know that when the stock reaches that area or average, our odds of winning on the trade are exponentially increased. And trading is, after all, an odds game, right? It's a probability game. It's not always a guarantee, but the more you mitigate your risk, the risk to reward becomes more desirable, okay? So that's pillar number 2. Again, pillar number 1, there's got to be volume. You've got to have all these traders in there making things happen, making things move. And then pillar number 2, risk mitigation, is actually having the data to back it and know what one of these explosive stocks looks like based on the averages or the criteria that, all the ducks in a row that line up. Number 3, let's finish the last, there's a little bit left here. Like I was saying, there is no strategy that is 100% risk-free, but in developing the strategy, I attempted to minimize risk wherever it could be minimized. Awesome. Number 3, ease of use. Third pillar. The strategy is very simple. Often human beings love to complicate everything, but DI's gone to a huge effort to simplify and make this easy to use, easy to understand with practice and education. Enter at the 100% point. Okay, what he's referring to, let's go on to TradingView. Again, we've been using LBPH for this strategy training, just so that I use the same ticker throughout because it had a run recently. And I believe in our last video, I showed you, actually it might have been the first video, but regardless, on TradingView, I've already added it, this yellow line, but you just go and pick the horizontal line right here. And I've already added it to the chart. Oops, let me get rid of that. This white one right here. Now look over to the right. See? So you find what he just said is you find the 100% mark. And this, you can find this before, once the stock climbs up into the top gainer position, go ahead and put that 100% line. One of our members in the Discord, his name's Term. He created, let me show you in the Discord today. He once again reminded us in the main board, he actually posted this today. He actually created an indicator that you can actually add to your TradingView chart that automatically puts the 100% line on the top gainers. So you obviously have to put the ticker in on TradingView, like I did, LBPH, and then add the indicator. So let's see, what did he call it? He called it 100% daily gain levels. So I'd go here and put in 100% daily. Here it is. It turned 401, you stud. And then you would click it and then you can add it to your indicator favorites. and then it'll automatically show up on any ticker that you pull up. And so usually when these plays start climbing on the 100%, for example, in Webull, they're climbing up this list, right? But we aren't really interested in anything. You know, I'm sitting here watching this. Okay, this one hit 100%, so I'm paying attention to it, right? So I'm going to pull up KAMN and put that line on the chart, and then just be aware. But a lot of times, the top gainers, you know, I'll just look at like maybe the top 5. Once one gets to like 90%, 80%, I'm going to go ahead and throw that line up on the chart, and I'm going to start watching it, because the whole point of the 100% beyond strategy is to be aware and, you know, cognizant of when that stock hits 100%. So where were we? Going back to Trading View. And so you're already ready to go. Okay, let's go back to the document. All right, so ease of use. Enter at the 100% point and exit either when you have made enough money and are happy, or when the Tilson 3 indicator shows a sell. What's the Tilson 3 indicator? There's two indicators on my chart. I've gone over that in the previous training parts 1 and 2. And the choppiness indicator is the blue candles, turns your green candles blue. It basically denotes volume. And the Tilson 3 is this green and red line. Okay, and I already showed those in the previous videos, how to add them to your trading view chart. So like he said in the document here, he's saying buy at the 100% point, enter at the 100% point once it's held, and then you can either wait until you've made enough money, or you can wait till the Tilson 3 goes into a sell on the 5-minute and 5-minute time frame. So going back to Trading View, I've got this on the 1-hour time frame. So let's switch it back to the 5-minute. It's going to change our chart to the most recent trading day. So I'm going to have to squish the chart back down. And it moved the 100% line. You can't squish the chart when it's on 100% or on percentage. So I'm going to switch it back to the regular money. Now I can squish the chart down and get us back to the day that this stock initially had its big run, because that's what we care about as far as what I'm trying to teach you when it comes to when to buy and when to sell, right? Okay. So now that I've got it squeezed back up, sorry, that's just how it is. I'm gonna take this to 100 back to the percentage, and then I'm going to, yeah, it's at like 100.82, close enough. And I believe terms indicator will put it on the chart for you, so it'll stay in that spot. Anyways, so what he's saying is here in this document, once it hits 100%, you wait for the Tilson 3 to go into sell on the 5-minute. And let's see where that would have got us out on this initial run, okay? At 100%, it stayed green on the Tilson 3, about to right there. See, I mean, honestly, it went all the way up to like 200%, right? And you can try to sell it there and hope, like he said, if you're happy, sell it, right? Don't wait for the Tilson. But if you just want to have a solid ruling in place regardless, at the 5-minute, you can sell. And that would have been at 138%. So you would have made about 40% on that trade. And then you sell it. Okay, let's go back. All right. When you sell the position, the play is complete. This strategy is not complicated. It does, however, require attention to detail, and I recommend paper trading the strategy first at length before you enter with real money. Your brokerage should have a paper trading option. Okay, it's where you just go in and practice like a simulator. All right. Now, ease of use, color palette. As a day trader, and he's talking about the Scoreboard color palette. Okay, so let's go back to our Scoreboard channel. Open the Scoreboard, and here's the color palette. Okay, lots of colors, beautiful. Okay, as a day trader, we respond to patterns, pattern recognition, or at least we should respond to patterns. I decided to use a color palette when building the Scoreboard so that we could easily differentiate between data fields and see trends developing within the data. It's easier to notice a pattern shift in color, green buy or red sell, than to have everything just be black and white. I mean, this is kind of stating the obvious, but we can look at the scoreboard and make decisions on what trends are emerging or shifting based on the change in colors. So that's pretty self-explanatory. If you have any questions, feel free to ask in the main chat on the Discord about that. Don't want this video to get too long, so let's talk about the fourth pillar. FOMO control, fear of missing out, is a huge psychological barrier that day traders face on a minute-by-minute basis. Generally speaking, if you have missed the entry point of a play, 100%, and DI today in one of his posts said that 100, well, I'll just read it to you. It's actually pretty good. Check out what he said. He's always sharing his words of wisdom on our Discord. Check this out. Ever heard of last call? You know, your last chance to grab a beer before the bar pulls the rug or the plug shuts the doors. With these 100% beyond plays, there's a point that I call the last ad. Here's a few questions and answers surrounding the last ad point. What is last ad percentage on a strategy play? Here's the answer, to 125%. So he's basically saying you shouldn't buy in or add because it's like the diminishing returns, right? The risk, the higher the stock has run up, risk to reward, the risk is too high and the reward is diminished. Okay, so 125%. So on our trading view chart, if this stock, you've been watching it, but maybe you missed it, and it's at 125%, he's saying that's your last chance to get in. Okay. Oh, sorry. Back here, kind of on a tangent right now, but I think it's really cool how this is coming together. Okay, so what is the last ad percentage on a strategy play? 125%. Why is it there? Let's see what the answer is. Why is it there? The average gain on a strategy play is about 250% on the initial run, and that's going to be in the scoreboard, average-wise. And I'll show you that. Back to the scoreboard. See, you're gonna, in time, you're gonna get all this to just meld and become a part of your decision making, right? So back to the scoreboard, open it up, and right here, see first run, first gain, these green columns in the middle. On average, the first gain, when the stock initially launches, it's 238%. And right here, in this message he shared today on the main chat or the main board, the average gain on strategy play is 250% on the initial run. The last ad point at 125% ensures that I can still make 100% on average. If I add at this level and sell at the top, 250%, that to me is a fantastic return on investment. Okay. Number 3, what's the question? What if I missed the last ad point? No problem. Just enjoy your profits from the initial break of 100% and ride the tilts until it bucks you off. Like we talked about, that play was like 40%. Is 40% a good return on your money? Yeah, it's good. Better than the bank, right? Do I need to add at all? No, not at all. However, you should get used to taking advantage of a winner when you can. Why is it important to add at this point? In trading, you need a system. This is part of that strategy play. System that helps mitigate risk and keep you in control of the trade versus the trade being in control of you. And number 6, is there risk involved in adding higher? Yes. If you continue to add as the percent gain increases on a play, then you're increasing your risk profile by constantly buying into an escalating price action. It's better to go in initially with a bigger position and add low than to get FOMO and add higher. Why? Do you remember a minute ago when he talked about all the people in volume, all these people in this first paragraph, long positions, short positions, retail, these people all have agendas. And, you know, they've already bought in probably under 100% or at 100%, and they're looking to like, when am I going to get out? So that's why your returns diminish the longer you stay in, because all these people are going to start exiting, and that's going to send the price in the other direction. Okay. All right, so the strategy has been developed with certain pieces of information. Okay, I think I skipped something. Generally speaking, if you have missed the entry point of a play and that play is exploding, then people will get in late because they don't want to miss out on profit. By doing this, they are putting themselves in a high-risk position and generally setting themselves up for loss. The strategy has been developed with certain pieces of information on the scoreboard that will minimize FOMO. These superstars of the day trading world repeat themselves almost every day, sometimes multiple times a day. And when you look at the scoreboards, you'll see that. This will help you keep the FOMO in check by creating the discipline to merely wait on the next trade. As I tagged this, we are averaging 9 hours from strategy play to strategy play. Where do you find that information? Go back to the scoreboard. You know how we're just constantly talking about averages. Right here across the top, time to triple. Time to triple means how often do we have a runner that goes to 100% triple digits, right? Time to triple. Right now, on average, it's every 10 hours. Okay. And the dark blue column to the right of that is runners. How often are we having one of these runners? Right now, like one a day. So it's just all ties together, and it's an ongoing reminder. And he's constantly posting in our Discord. I mean, that what he posted today goes right hand in hand with this presentation. Final thought: execute your plan and plan to execute according to your preset strategy. If you're making it up on the fly, you're flying out of formation. Think about what you're going to do and be ready with your game plan before the trade unfolds. So important, so important. So, like I talked about in the beginning, you have the antler with the 4 pillars. One of these pillars, that's your trading plan. What's that saying? If you don't plan, you plan to fail. I can't remember. I'm butchering it here, but without a plan, you're going to fail in trading. Why is that? Because trading, there are no rules. There is no hard set in and out unless you create it or you find it. You've got to have a strategy, a methodology, a system, a systematic approach. And that's exactly what the scoreboard strategy gives you. And so let me go back to the document here. Just in review, 100% beyond pillars. The strategy was built to maximize profit and minimize risk. Momentum through volume, risk mitigation, the averages, ease of use, colors, and I mean, it doesn't get easier than the 100% line and buy and sell on the Tilson 5-minute, right? And the last is FOMO control. And FOMO control is knowing that every 9 hours you're going to have another chance to do this again. And for some reason, people overtrade because they're like, oh, I got to take that one. I got to take that one. But once you start mitigating the risk by realizing and looking at the scoreboard, like, oh, wait a minute, most of these stocks that come up on the top gainers list, they're garbage. They're never going to go 100% and beyond, and they'll sell off. So you just leave those ones alone and you focus on that top gainer. And that top gainer, again, has to fit the averages. What are the averages? Again, back to the scoreboard. They're across the top, right there. The launch price, if it's a dollar stock, okay, first the Virgin ticker, and we're going to go over this throughout the document again and again, but I'm just going to go across it really quickly. The launch price, or I mean, the stock needs to be a Virgin. It couldn't have had a run in the last 60 days. So you go back and look at the chart. This one's a perfect example, LBPH, right? Let's go back and look at the chart. I'm going to switch to the hourly again really quickly because remember, you put the 100% on the chart when the ticker started climbing up into the 100% range, right? And then you come back here and look at the chart. Did this chart have a big run in the last 60 days? No, not at all. It's perfect. It was total Virgin, and it exploded. It exploded. Why did it explode? We're probably going to go over that in a future part, but the reason why they explode is because nobody's in it. The volume that he talked about, all these different players, they're not even in it. Everybody's sold out. There's no bag holders. There might be some long positions. The shorts have already covered. They're no longer defending their position. And so it creates this explosive opportunity where volume just pours in because some catalyst pops and it just explodes up. Virgins do that. They're the ones that create these supernova opportunities. Because I mean, it started at like 30% on that day, and it went all the way up to like 481%. That's what Virgins do. Okay, but there's more to that, right? It's got the average of it's a dollar stock is around 285. So that window is starting to like be the sweet spot. Okay, penny floats. Now we're going into the float. We'll get more into that later, but I just want to cross these off the list real quick because we haven't done this yet in any of the videos. Penny floats, the average float size needs to be around 11 million shares. Dollar float needs to be around $3.61 million shares. Float's important because And down here, he says if it needs to be less than 20 million, if it's a penny, and needs to be less than 20 million if it's a dollar float, or I mean a dollar stock. Why is that? Because if it's a huge float, like hundreds of millions of shares, it takes a lot of volume to move that stock. That's why you see these huge blue chip stocks with like 1 billion shares. They don't move very much in a day. They might move like 2 cents because it takes so many traders around the world to move the stock. Whereas this scoreboard gives us the sweetest, most perfect situation, and like the perfect storm I talked about in the previous video. And now I'm not going to get into those. There's a lot more to come, but you get the idea of how exciting these averages are, right? The blue columns here, this 4 in a row, are the averages, the best time of day to take advantage of opportunities, or like right now you can see that first column. Look at all these runners that happened at 6:59 Central, which is 7:59 like 8 a.m. Eastern, right? That's the best window of opportunity. You've got the average right there, and he's crunched 100 days worth, or 100 a whole year of data. The first run runs at 50 on average 55 minutes. That's another reason why he's talked about that 125%. Let's see how long the stock had run. I'm pretty sure this one was a pretty big mover. This is our 1 hour. Oh, geez, this thing, man, that is a lot of time. But on average, the first run, see, this is the hourly. So let's go break it down to the 5 minute. Got to shrink it back again. Squish the chart. Okay, I can't squish the chart unless I turn it back to dollars. Squish the chart. Again, this is another way to mitigate your risk. He talked about 125%, right? Don't get him beyond that. This is 5 minute. All right. Okay, so 5, 10, 15, 20. So this first one was only 20 minutes. Okay, so it's a little below our average of 55 minutes. But if you switched it to the 10 minute, the Tilson probably won't even go to yeah, it didn't even go red. You can use different time frames as well. So yeah, that was an explosive movement. It held strong. That volume just pushed that stock all the way up. The Tilson never did go into a sell. And we're going to learn more about averages, or I mean 10 minutes, 5 minutes, different time frames. But this video has actually gone on longer than any of the others. So we are going to close this out. But join us next time, because it looks like we're going to get into more detail on what the different columns are. I've kind of already delved into that, cheated a little bit, but we'll make that part 4. We'll go deeply into the scoreboard columns and rows and the averages and the power of this crystal ball that really increases your odds, the probability of you taking a good trade, and diminishes your risk, or minimizes your risk, mitigates your risk. Now let me see if there was anything else I wanted to cover. I believe I already showed our YouTube channel. If you haven't already, go there, subscribe. Looks like we've got 13 subscribers. It's public, so you're welcome to invite people to come check it out. All these videos are going to be posted here. All right, that pretty much wraps it up, guys. One other thing I wanted to go over today while we're here is I just recently changed our Discord. We used to have like 50 channels. I've super simplified it. We've made it more tip of the spear scoreboard strategy, because for the last year, we were like developing this, and we had all these other channels. There was like guinea pig, research and development. And now we've just really narrowed our focus to make it even easier for the members in our group to stay on point. All right. And so just real quick, there's the welcome video, a little history about MTT, or My Tribe Trading. Please read our disclaimer. you know, at the end of the day, you're the one that has to, it's your money. So we basically, you're the one that has to push the buttons. So read the disclaimer, because all our, some of the traders in our group, their results aren't typical. And so there's no guarantee, there's no promises here, but the Discord is free. We're not charging anybody for it. So the information is there for you. The tribe rule, main board. This is where we mostly talk about just all kinds of stuff. Long board is like when you go long during the trading day, and the scoreboard strategy 100% and beyond, you're going long. So most of our communication happens here during the trading hours. And then when you short, we switch to the short board, or those who decide to short communicate there. Happy board is like happy hour, and then the scoreboard, we've gone over that. Strategy board is where we've been posting these videos. So this one today, we'll then go into that area. You'll see this pop up. And then instant replay is coming soon. DI shares these when, like, at the end of the week, he'll go back and find the best top gainer, and he'll do an instant replay for you. So he can basically show you where the volume triggers are. We'll go over that, the 5-minute Tilson, short position entry if you decide to go short. Volume trigger exceeded, so it broke the short and took off again. And then he gives you a kind of a synopsis or breakdown of what happened. So I'm also going to be weekly. I'm going to delete this coming soon because DI already posted. Where is that? Delete message. I'll be posting weekly videos because I love to do this too. And I encourage all of you to learn how to chart these so that you can also, because something happens when you teach other people, you learn even more. And sometimes we wonder if anybody's even paying attention, but I like to just do it because I'm paying attention. And when I think from the perspective of sharing it with somebody else, it makes me think even better of whether or not I believe what I'm learning and if I actually am practicing what I'm preaching. And then my Tribe Trading Live is just oops, I just went live. And hang that up. We can all go in there and chat and hear each other's voices. And someday, eventually, maybe we'll do that in real time while we're trading, maybe during the best window trading of the day. Let us know in the comments on YouTube if you'd like to see more of that, or even just go on our Discord. Feel free to enjoy or welcome your, anybody that you think could learn from us. And possibly DI is always talking about, let's get rich together, right? So we'll see you guys next time, all right? Take care. See if I even recorded this.